This is going to be a short video on how to read market narrative and um, how you're able to capitalize on these all-time high conditions and how you could have seen this coming. Um, so starting on the monthly, we are going to be looking at January through March. So we see January through March, price ends up creating these pending levels, which are these levels that I want to see end up getting taken at some point. Um, as you can see that we're currently drawing towards, but how you could have anticipated this was if you look at the monthly for March, what we're doing here is we're delivering out of a monthly BISI, so buy side inefficiency, sell side imbalance. And pretty much what that tells me right now is we have an institutional order flow entry drill. So this is our IO Fed. What that is we're basically rebalancing a gap towards this 50% line. And then after that, we push out of it. So this is our monthly AMDX. So we have this accumulation phase and then our manipulation phase back out of this monthly fair value gap. And now we're headed towards these levels. But how you could have seen this coming was, for one, we are rejecting and bouncing off of this monthly gap. Now, if I take my GAN box, I'm not using OTE, but I am going to be using my quadrants. So as you can see, we do have delivery from the monthly wick from March. When people say you can use a wick as a fair value gap, this is essentially an example. So what you're seeing here is pretty much the rejection off of the first quadrant of this wick. So what that tells me pretty much is price does not want to continue any lower. Now, if price did continue lower out of this wick, out of 50% of this wick, this would make it less probability that we would want to continue to push higher. Now, since we're not coming back towards equilibrium and we're just rebalancing this wick and pushing out of that 0.25, this makes it higher probability that we've already covered this area of price action. So there's no need for price to continue lower. Now, if I scale down to the weekly, we see a rejection from this, this weekly wick as well. So this is a short-term rejection where we end up pushing higher. Now, if I scale back to the monthly wick, and I'm going to be putting my quadrants. If I go down to the, let's say, 15-minute. So we see the monthly wick low, and then we see where April opens up and we push out of that 0.25 quadrant. Now, simultaneously, we have built this range, right? So what do we have? External sell side swept, V-shape higher. Now we've built this new range. Now what this new range is, from high to low, we're rebalancing towards equilibrium right here, bouncing off of this 50% level. Now, what this tells me is we are now in a buy model. We have already generated sell side of the curve down here. We've put in a low, came back in, re-swept this low. We now have a protected low down here. Now, if I go to the 4 hour, this looks a lot more clear. we have all of these pending levels, these highs, just ready to get swept, which ends up happening. Now the next levels I'm looking for are right here and right here. So now since we are in a 4-hour buy model, what we are looking for is this rejection right here. So this is exactly what we're looking for. We're looking for a rebalance towards 50% of this new range that we've built from high to low, a rebalance towards equilibrium, right? And then the 4-hour inversion right here. Now, this makes it a higher probability just because we have these stacked fair value gaps that we can push out of. There we go. Now, how you could have used this to your advantage yesterday is like this. So we know time is fractal, right? We know we are in a monthly, according to quarterly theory, we do have AMD playing out. So from here, Asia, price delivery, London price delivery, and then we have New York session price delivery. So basically, since time is fractal, what you see on the higher time frame will reflect on the lower time frame. SMT at these lows with ES. If I mark out my standard deviation tool for manipulation leg high to low, we'll see the perfect rejection from negative 3.5 right here. Boom. Now, what makes this important is this is not just a random rejection. This was a higher time frame POI as well, right here. Now, why was this a POI? If we go to the hourly and we look to the left, we will see these hourly CISDs. Now, these levels you will notice always get revisited. So my point of interest, we're here, here, and here. Now, this area for me was higher probability because we had these stacked levels with my standard deviation aligning perfectly as well. And you notice this entire thing is just about or less than a 10-point stop. Boom. So you could have gotten away with the 6-point stop here from this point of interest level targeting this low or this low. Now again, that was just a short-term retracement lower for the market to correct itself after such a bullish move higher. But that is how you can use monthly AMD in order to align your trades for time and price alignment. So yeah, biggest takeaways from this video I'd say is rejection from monthly gaps. You can see the Q2 of the monthly cycle price delivery starting with April opening up bullish and then delivering towards these pending levels. So in order for a reversal to happen, one asset either ES, NQ, or YM need to unsync from one another for us to get a delivery hire. So yeah, guys, I hope you guys learned something from this video, and thank you guys for watching.